Hi guys, how are you doing? Thank you so much for tuning in. My name is Nguna Esther and the channel is also called Nguna Esther. So I do coach on investments and on taxes. If you're seeing me for the first time, if you're returning, thank you so much for the support. Yeah, if you haven't subscribed, guys, it's the only way I see your support, and it's free. Absolutely will not cost you any dollar, any shilling, any dirham. Please, yeah. Anyway, thank you so much for tuning in today's video. Today's video is I'm shedding a lot of light on ETFs. So without further ado, I almost beat myself saying ETFs. Without further ado, let's get straight into the video, and I will start with the definitions, but that's not what I want you to. I don't want you to get here with the theory, guys. I want you to get out of here and take advantage of ETFs. So let's agree. So do the research where you need. Please do more research, but please take advantage of ETFs. So let me, however, give the media. And ETFs are exchange traded funds. Exchange traded fund. This is a fund that is traded in the stock market. So in way simpler terms, it means that it is a basket. It is not a singular share, it is a basket. Yeah, and this basket is also publicly listed, just like that one single share, like Safaricom share or Amazon share, just like that one share. This basket of shares is also publicly listed. So what does that mean? That means that an investor like you and I will also go to our stockbroker and buy this ETF, just the same way you buy shares, or the same way you'd invest. Oh, someone is calling up. Just the same way you'd buy shares in the stock market. However, I want to also mention that, and this is for an investor like, again, what am I saying for an investor? For investors like you guys and me here, because we must be investors. We don't have ETFs for shares only. We have ETFs for crypto. We have ETFs for government bonds. We have ETFs for corporate bonds and many other assets. So in a manisha, instead of investing in Bitcoin alone, Ethereum alone, you want to take advantage of both of them. You buy a basket of such assets. Or instead of buying one government bond in the global market, in the developed markets, I just mean in the USA market, in the US market, instead of buying one government bond, probably it would have been at 18%, another one at 10%. Oh, but their bonds are really, the interest rates are really, really low actually compared to the ones in Kenya. But instead of buying one bond, unanunua mchanganyiko, which is effectively and efficiently mixed up for you for better returns. So for the sake of this video, we are talking about stock ETFs or equity ETFs, shares ETFs, same word, which are also called index funds. So tumeelewana hadi hapo? So they are called index funds because, first of all, the stock market is a not just the stock market. Everything has to be tracked. Everything has to be, costed. Everything, accounting is everywhere. So for the stock market, we also track. For the stock market, rather, the stock brokers and the management firms, they've also developed ways of tracking how shares are performing. So they've developed ways of tracking how the stock market is performing. So we have, like here in Kenya, we have NASI, that is Nairobi All Share Index. We have Nairobi Stock Market All Share Index, or Nairobi All Share Index, something like that. We have NSE 20, we have NSE 25. These are ways of tracking. These are numbers, these are trackers that track how these shares are performing. Both me and you want to know how the NSE is performing as a whole boss, how a certain group, how the banking sector is performing, vitu kama hizo combined, how one company is performing for sure. So these indexes, they track the performance of shares. And in the global market, which is the home of ETFs, in Kenya we have two, but as I said, we are growing. But in the global market, we have 1,000,001 indexes. We have companies coming up with trackers that perform, the banking sector that perform, the tech sector that track the best 30 companies, 100 companies, hivo, sawa, and they're called indexes, just like any other index. Okay, so the same stockbrokers and investment firms, they now develop or they come up with a product now that is investing in a certain index, or that is copying or mimicking a certain index. So the common index, which is the main index actually in the US, is called S&P 500. Don't worry about the S&P, it's the company that began that index. The 500 now, it means that it tracks the performance of 500 most valuable shares, most valuable, most influential companies in this particular stock markets. We have another one called Dow Jones that tracks the best 30 companies in the US stock market. We have Nasdaq. Oh, Nasdaq is good, yeah. All of them are good. Nasdaq tracks tech companies, tech and growth companies in the US stock market. These are the companies that you're investing in, yeah. Both you and I have the same opportunities as Mark Zuckerberg and this other cute old guy, Warren Buffett, and why would I say cute? Yeah, but both you and I have the same opportunities. So I'll give you my 5 best reasons why I am convicted to continue buying ETFs. I mean, they just add up. It just makes sense for me. Yeah? And the first reason why I'm even there, why I'm buying an ETF, is dividends. The money, dividends. That's the reason why I'm even there in the first place. That's the reason why I opened a CDS account in Kenya, anywhere. That's the reason. That's the number one reason. Dividends. So dividend, if you're not familiar with the word, dividend is a way of a company paying back its shareholders, just giving them something, for all the shares, for all the capital that you've given us as a company. We are giving you something out of the profits that we've made. You gave us capital, we've made profits, and now this is something for you. Companies, blue chip companies, that is stable, strong, established companies, pay dividends regularly. And in the US stock market, we have dividend aristocrats, companies that have been paying dividends for the past 25 years without fail, increasing them. And that is why we have people like Warren Buffett who are rich because of the stock market. Yeah. So dividends is my absolutely number one reason. And most of the ETFs, or the one that pay dividends, actually most of them pay dividends quarterly. Why? Because there's that the return is regular. Why? Because company one, as I said, it's a basket of shares. It is not like buying one company, Safaricom, or a bank. If a bank is paying dividend in let's say May, it will pay the other one in around after about 6 months, because it has paid an interim and a final one. So let's say a generous company will pay dividends twice. So on a normal on a good year, rather, not on a normal year, on a good year, a generous company will pay dividends twice. And as I said, dividends are a distribution of a company's profits just to say thank you to the shareholders, and it's actually a way of earning passive income. And the reason why there's that regular payment of dividends is because you'll find company one is paying dividends in March. There are many companies, there are many companies under this basket, and they all pay dividends under different times, even if there's one or two that is not paying dividends, we have other 50 other. You can imagine a pool of 500 companies, and all of them are blue chips, extra blue chips. They're paying dividends. So what's the excuse for actually not paying dividends monthly? Yeah, so because of that, there's that regular income. And that's one reason absolutely why I both prioritize ETFs and stocks, because an ETF si kama kampuni moja. If Safaricom has paid dividends, they expect the other one next year, at least after 6 months. But for this one, we have many. Safaricom today, Equity tomorrow, KCB the other day, Evo. The other reason why I'm very much convicted to continue buying ETFs, because I started buying ETFs, and this is actually part of my experience I'm giving you. So the other reason is the spread of risk, and I will say specifically concerning the one that I have experience with, the S&P 500. It's 500 companies. However, when one company performs badly and it drops, it is replaced by another which is better. So that means that at any point itakuanga 500 best companies. So you see, there's that spread of risk. The other reason is the super low management fee. The one again that I have experience with, which it's coming in the next video, has a management fee of 0.03%. As in, out of $1 million invested, the management fee is 300 bob. A unit trust will charge me management fee of 2% in average. A stock broker also in Kenya, their stock brokerage fees are around 1.4 to 2%. Yeah, so you can see 0.03%. Ooh, yeah, and it's a tiny amount. At the end of the day, you still have to invest, but if you're getting such a steal, bruh, take advantage of it. Yeah. The other reason is also and this one is actually very important, yeah, to me and to you as well, is that I buy fractions of shares. But normally in the US stock market, and I said, why is my mind everywhere? In this US stock market, you can buy fractions of shares. One thing you have to know, don't say I didn't tell ya, is that also in the NSE now you can buy one share. So the other thing you have to know also is that the shares in the US and other developed economies, their prices are high. Kwanza, if you look at it from our point of view, converting to the US, to the to the dollar, the shares are expensive. Even dollars are expensive. So being able to buy fractions of shares is absolutely it's an opportunity to everybody. Anyone can invest, because you can invest with your 5k, with your 10k. You can invest with the money that you have. So there's no excuse not to invest. Just with the money that you have, you can buy, because you can buy fractions of shares. So it means that ETFs are not for the rich. The stock market is not for the rich. The stock market is just for anyone who has information. That's it. For anyone who has information, because for sure it is information which makes companies, which makes people invest strategically. It is also information which makes me invest in the first place. It is that exposure. So the stock market is not for the rich. It is making that 1%. I saw that list. It is making that 1%, and it can also make you part of your 1%. Okay. The other reason is the ease of trading. And yeah, it's a global market. In Kenya, we don't have a stockbroker that has opened us to the global equities yet. So it's understandable if that scares someone. But let me tell you my experience. I use a broker called Interactive Brokers, highly recommended by a coach who was taking us through the nitty-gritties of the stock market investing. And I don't have any reason why I can't recommend it, because first of all, it's a self-service portal. You onboard yourself, you send the documents there, the links, everything just flows. Secondly, you don't have to follow up with anyone. No one has to trade on your behalf. No one has to confirm the receipt of your money. No one has to buy your sell, which is said, on your behalf. Absolutely nobody approves anything for you. It's seamless. You're the one who's controlling it on your phone. They have an app. They also have a portal. The other thing would definitely be security, and if it's legit. And absolutely, yeah, I can confirm it. I have tried it and I have tested, and it is true. It is legit. They have 2FA, two-factor authentication. If you log in from your portal, it sends that code to your mobile app. It's secure. Sending money, you're not sending to a Pablo Escobar somewhere chilling in Miami. No, you're actually sending to their bank, and it reflects in your account within a very short while, maximum of 30 minutes, 15 minutes, And how you know that you're actually sending them the money, is that now you initiate that. It's a prompt. There's a prompt in the system where you prompt them, just notifying them that you're sending a certain amount of money, and now the bank details show. Okay, 100% self-service. You don't have to be following up with emails. You can imagine, because it's an international broker, so they receive money from Korea, Kenya, Tanzania, from everywhere. So you can imagine if it was actually sorted by an individual, there'd be so much fraud, yeah. Everything, you just do it on your app. You sell, the money comes in your app. You can withdraw to your local bank, or you can reinvest back. There's a check box for reinvesting directly. Dividends are just reinvested automatically onto your portfolio. So absolutely works. The first time it will scare you, but good thing is that we have YouTubers who have described it. So those are my absolute 5 reasons. I will repeat it again. I'm there for dividends. So should you. I will insert here a graph of S&P 500, a graph of Dow Jones. As in, these markets don't play. They don't play, and they've been there ever since 19s. It's actually the S&P 500. It's the benchmark asset for the US. What this means, in Kenya, our benchmark asset is the TBL. It means that it's secure, it's stable, it's proven. So una measuring performance of every other thing compared to this. Stock market, of course, in a panda, in a shuka, but in the long run, in a panda, if it's a good company, if it's a growth company. Yeah, so these are tried and tested, and absolutely you have no reason not to buy ETFs. Not sponsored, just something that I absolutely know, and I would definitely, this is from my heart. Yeah, this is from my heart to you, so take advantage of it. Thank you so much for watching. Please subscribe, and I will see you in my next video. Bye.